Yeah, hello and welcome back. So you who are a shareholder and investor in many companies and you are looking for something to invest in where you think the downside is limited, well then I will share you what I have as an opinion on that subject. I will share with you a story about the company, which is my largest position now and has been for a while. And I will share you which company that is and why I own it and why I have focused most of my capital in it. So the company is, of course, Berkshire Hathaway, a big corporation which is known to many because of the legendary investor Warren Buffett. So yeah, Berkshire Hathaway is my largest position. In this video, I will share with you the story why I decided and ended up with being having Berkshire Hathaway as my largest position. I will share with you why I have such a conviction in that stock, and I will also see if I can get some time to go into some earnings and details and valuation for you if I get time. My wife will probably call me soon, so I'm trying to make this video quickly. Try and make it less than 15 minutes, and then if we have time, I'll share with you what I believe about this company going forward, how you will do as an investor in the company for 10 years or so. So a long-term investor, and this is a share I like to hold for long term. So let's dive into the story then, why I invested in Berkshire Hathaway to begin with. All right, so the story is so that I had invested in real small businesses in where I'm from in Norway for a few years. I was trying to do well as an investor by starting in kind of silly to say some private equity, but it was more investing in and buying control of small businesses and then trying to grow them. Did go well, some of it did not go so well, and I figured I still wanted to do well as an investor, and I wanted to learn to do it properly and be, if I'm going to do this for the next 10, 20, 30 years, how should I proceed? I want to do well and make a living from being, or at least have a good income from investments. So, how could I do that? I was thinking, and I had always, of course, been a fan, an avid reader of Benjamin Graham and Warren Buffett and Joel Greenblatt, and it started to dawn on me that what I was doing was not the most um, long-term approach, or maybe the best approach. I thought if I was going to get better, I had to change, and my change was because of being well. I figured I can't do bad investments anymore, and at the time I didn't know it was so bad, but I was lucky enough to pick up. And pick up the idea that Warren Buffett wants to be known to be a very, very good teacher, not just a very, very good investor, but be known as a teacher. And then, wow, if you have such a brilliant investor who also wants to be a good teacher, um, then maybe I should just read everything that he has written. And so I decided to do that. I downloaded or purchased the Kindle version of the Berkshire Hathaway letters to shareholders. I think it cost me less than $5. And I went through every letter. I started at the beginning in the 60s, and then I went through every yearly letter until I reached the current year back then, which was I think I ended in 2017. Then end of 2017, then I had read every single letter, and I really enjoy them, and I really recommend you, if you try and pursue the goal of becoming better with investments, I would encourage you to read what Warren Buffett has been writing in his letters, because it's a very good education, and you also get a very good business understanding of the approach that he has been following for many years, and hints and clues to how you can become a better investor yourself. Okay, so that was the story. I was in these businesses as a small private investor. I read all the letters, and I was so fascinated and super like I was was almost, this kind of changed my mindset so much, and I was really changing how I would invest from then on. That from now on I will only invest in the style that Warren Buffett has been describing in his letters, at least the most important principles that he teaches there. And then it's up to me to try and find those qualities in my own company analysis. So the story continued with that for example, I went to the United States, and I visited some seminars, like Phil Town has his workshop, for example. That was a lot of fun. I went there with a friend, and then I also went to Omaha for the annual meeting of Berkshire Hathaway 2018, and that was really fun. I got to meet many fun or great kind shareholders who were also very like-minded and enthusiastic about good investments, and we had a lot in common. Then that was fun for a few days. We could mingle and share ideas, and we could see the annual meeting with Warren Buffett and Charlie Munger on stage there with, I think, 40,000 people back then in the same room. So it was quite cool. I would recommend to both read the letters and go there in person while you still can, to see how it is. And that was the story. So from then I changed my approach, and I wanted to invest only as follows. And the rest of the video, or the next part of the video, is that I will share with you what is the main ideas in the letters of Warren Buffett to his shareholders, and the ideas that changed my approach. And that was in order to become a better investor, of course the most important thing is to not lose money. And then what he figured out over some years was that you want to have a company or some business that can fend off competition and have a durable competitive advantage. And there's a lot to that idea, and I will not explain everything here now, but the main investment strategy that you learn in those letters is that you have to own some companies that defend themselves from competition, and they can reinvest capital into good businesses that have a much higher return on capital. It's a very simple idea, but that's how you get rich. That's at least that's one way of getting rich, and if you can do that for a long time, the compounding effect will materialize there. So that's what I tried to do then, and I was still fascinated by the letters and the history of Berkshire Hathaway. So I was kind of devoted to invest more into Berkshire Hathaway itself. Like, why not? It seemed not to be so overpriced at all. Actually, it seemed cheap back in 2017-18 or so. So I bought. I sold the companies I had mostly at the time in the stock market, and I reallocated my capital into Berkshire Hathaway for most part. And then since then I've been investing also in other companies with my income into companies that share those qualities that I mentioned here. So then well, I invested mostly into Berkshire Hathaway, and I think the price was roughly $160 at the time, and now it's not far until it reaches $400. So I'm naturally investing mostly back then, and also continuing to invest in the company has made Berkshire Hathaway into my largest position in the stock market. So that's the story of how it has become that, and I try never to sell the stock unless I find something really seeming much more appealing or having a lot of more value. But it's usually a mistake if I sell in Berkshire Hathaway, and I try not to. And so, okay, we have 10 minutes now. Let's see if we can get to the juicy stuff here before my wife calls me. Okay, so Berkshire Hathaway, if you are a shareholder of Berkshire Hathaway, what do you own? I'll try and explain that to you in the second part of this video. What do you own, and what is Berkshire Hathaway? Briefly, I'll try and do this in 10 minutes now. And what will you earn, or is it like a good investment kind of? Is it worth it for the stock market price? I'll try and elaborate a bit on that now, and I'll try and speed up a little bit so we can do it before I get cold here now, or before the phone rings. Okay, so let's see if we can make it. If not, I will make a new video. Okay, so let's see here. As a shareholder of Berkshire Hathaway, you are owning a lot of companies because since the 60s, when Berkshire Hathaway was just a textile mill, Warren Buffett bought an insurance company in 1967, got a lot of money. When he controlled the whole insurance company, there was a lot of money on the bank account for some technical reason that is in a typical insurance company. They could use that money to invest in other companies, and he from then on, he as a shrewd investor, he allocated more and more capital into good businesses that earn more on tangible equity capital instead of being in bad businesses such as the textile mill, which it was back then. He has been continuing doing that all up until now, and we hope he has many years left in him still, and if not, then there are many good investors and companies that can reinvest the capital for a long time in Berkshire Hathaway. So, briefly said, Berkshire Hathaway is a big insurance company or business that reinvests and invests into many very good companies, and it doesn't pay a dividend, the Berkshire Hathaway stock, but it reinvests everything as long as it can do it in a good way for shareholders. So it's more, in many ways, like a fund, and owns many businesses, but it's, in my opinion, a collection and hand-picked collection of Warren Buffett of companies that earn much higher returns on tangible equity capital, and they grow profitably. And you own many 100% wholly owned companies. You own also shares in corporations where you own a minority stake. You also have a lot of cash on the bank account there, so it's and you own this insurance business. And let's go through it now. I think I can do this now in 5 minutes. Let's see. So in Berkshire Hathaway, you as a shareholder, if you were to own the whole corporation, you would own some equity, then the equity in the business of roughly $550 maybe billion. I make this video now in the end of September 2023, and you own a lot of capital in the market which is allocated in these businesses. And the biggest business in Berkshire Hathaway is the railroad, BNSF, or Burlington Northern Santa Fe, which they bought in 2008, I think. It has been growing ever since they bought it, a lot actually, and now the business is earning roughly $6 billion annually. So it's pretty big. You also own the Berkshire Hathaway Energy Corporation, which is investing and reinvesting everything into power production and renewable power production and infrastructure and also natural gas and many things, mostly in the United States. So it's a big business and also earns roughly 5 billion in 2022. And the third group is a group called manufacturing, service and retailing, which is earning about 12 billion in 2022. And this big group is a lot of very, very good businesses. You have many of them. You can read in the letters what they have been buying. But if you read the letters, you try and look at these figures where he explains how much the profitability of these companies are. You can see that over and over again, every year, they earn more than 30% on net tangible equity capital. And that's really traits of a very, very good business. So and that's as a whole group, they are earning a lot. Yes, so they also have insurance business, and in total of these wholly owned businesses, they earn roughly $26 billion. Excuse me, I'm trying to speak a bit quickly now to make this video done before I have to go. But yeah, you have roughly $26 billion in 2022 from these good businesses. And you also have equity stake, or you have you're owning shares in very good businesses, but just a few percent, or up to 10% or 20% in some businesses. For example, you as a shareholder of Berkshire Hathaway, the whole corporation of Berkshire Hathaway owns roughly 10% of Coca-Cola. It owns 20% roughly of American Express, and recently now from 5 to 6% now. It increased from 5 to 6% because of buybacks in Apple Corporation, for example. And I'll just give you a few examples that Apple as a corporation earned in total roughly $100 billion in 2022. And as I mentioned, Berkshire Hathaway owns 6% of Apple now, roughly. And their share of earnings then is roughly 6 billion. And the 6 billion, that's as big as the biggest business, the railroad that Berkshire Hathaway owns. So imagine that their shares in Apple Corporation is as important as the railroad in earnings, because it doesn't matter so much. You have two good businesses, but the cash is 6 billion from both businesses, and it's really valuable for Berkshire to own the Apple stake. And I mentioned the wholly owned businesses. They earn roughly 26 billion operating earnings after tax. And these shares, Apple, American Express, Coca-Cola, I think if we just take the 5 or 6 biggest, let's say six biggest, I think their share of earnings amount to roughly $15 billion. And then we are counting the earnings per share times the amount of shares they own, or trying to estimate the look-through earnings adjusted for some tax. In my opinion, or after what so far as I can see at least, it's roughly $15 billion you have from these shares that they own. And it's not all cash coming. They pay dividend. For example, Coca-Cola pays, not quite sure, I think it's roughly, not sure quite, but it's just a part of what they earn is coming as a dividend. But when I'm counting here, I count every dollar of earnings as $1 of earnings and value for Berkshire, because they are allocated in such a good way in these corporations. Okay, so you have in total 26 billion of earnings from the wholly owned corporations, roughly 15 from or more maybe from the shares that they own in other corporations, and then you have a total annual earning of $40 billion here in Berkshire Hathaway, and I think it will be growing also. And the last part of the video, let's see if we can make it. This phone will call shortly, so let's see if I can make it until the end. Now, if you want to be a shareholder of Berkshire Hathaway, you have to buy it in the stock market. And I mentioned that the equity capital of Berkshire Hathaway is something like $550 billion in the stock market. And you have to pay a premium. You can also count it per share. Like if you want to buy one share, you have to buy a premium more than the equity that is in the share. I think it's roughly 50% premium, because I'm talking about price book here. The price book is roughly 1.5, and that means that you're getting, when you want to buy shares from another person in the stock market, the trade happens at the share price, which is higher than the capital or the equity capital in the business. That's like that in most corporations, but in Berkshire Hathaway, this equity capital, in my opinion, and you can try and do the calculations yourself here, that this equity capital is earning a lot more than the average in the stock market, and I think in my opinion, it deserves a premium. So, and the history shows that it has indeed been doing that for a long time, and it's maybe you can argue that the Berkshire Hathaway was always undervalued, because the history shows that it was earning 20% annually for decades, and that's with a small premium on the share price. But yeah, so it's a fantastic history there. But I'm not saying that you will earn 20% in the future. I said in the beginning of the video, I think this stock is the safest I have. I have most of my capital in it, because I think the downside is limited. You have, as an ownership of Berkshire, a company, a selection of good companies that have earnings that I think is very likely to grow over the long term. And the $40 billion that you earn in 2022 now in the whole corporation, I think at least it will double in the next 10 years, because that's just a market return on average, like 7% for 10 years. That's double roughly. I think, in my opinion, that it will grow more. And then I'm satisfied owning 40 billions of earnings now, and maybe 80 or maybe 100. Let's call it 80 billion in 10 years. And I think the stock market price is roughly, I think it's less than 800 billion in the stock market now to buy the whole business of Berkshire Hathaway. And then that means that you get 40 in earning in 2022 compared to 800 in the purchase price. And that's roughly 5%. And that was in 2022. I think the earnings will grow more in the next year, and maybe it will fluctuate a bit, but in 10 years it will be at least 80 billion, in my opinion. And that means that you will have at least 10% earnings yield on your investment. And that, to me, that's a very safe position to be in. It's quite nice. I am very satisfied. I'm satisfied having most of my capital in something that will earn at least 10% in 10 years. Every year from then on, it will probably grow after that also. I think that means that the downside is limited. My biggest and maybe safest position. So maybe it will also grow more. I think the businesses that they own will grow more than 7% annually. I think because they are better than average. They are better than the average business. So I think that they will do better than 7%, and then I will be happily surprised if they do. So that's my story and some explanation of what Berkshire Hathaway is, why I have such a conviction in it. So I hope you liked the video. Let me know what you think about the company. Do you think it's a fair price now, or is it looking expensive, or what do you think about Berkshire Hathaway? What do you think about the story? Let me know. Comment in the video and give it a like, so you help to reach more people. I'll try and make some videos in English in the future also. My content is mainly in Norwegian. You can find my blog eivindkallevik.no. I'll try and make a description below here. And you can read it as an English speaker, or you can also translate it, I think, with the Chrome, or to translate the blog articles if you will read more there. So thank you for listening. I hope you liked the video, and I wish you good luck with the pursuit of becoming better at getting better investment returns and making a future where you have more income from the stock market. Thank you for listening, and I see you in the next video.